Hello guys, welcome back. Yes, in our previous discussion, we have make a complete MTP analysis video that if you don't watch, if you are not yet watched that video, first watch that and then come for this MTP discussion so that it will have a continuity over there. So in this MTP discussion, we are not going to solve each and every problem. Here, whatever I have discussed in the previous video, and if you get the PDF, whatever I mark it in a box, that particular question which is not there in your study mat, that is what we are going to solve right now. Okay. So our first question which is there in your material is 1A, third one they have asked. Reducing balance method of depreciation is followed to have a uniform charge of depreciation and repairs and maintenance together. Is it true or false? It will be true. How I will write? Just listen my writing carefully. Initially, when asset is purchased, under reducing balance method, depreciation is high and repairs and maintenance is low since asset is new. Is it right? In the later years, depreciation goes on reducing and repairs and maintenance will increase because of the usage of that asset. So there is a uniform charge on the P&L. For this, if you want to write, then only they will give you 2 marks. Just carefully listen this. I just want everybody to listen, to have an interactive session. Don't even write it. You will get this PDF. Okay. Then come for question number 6th one, which is not there. Receipts and payments account highlights total income and expenditure. No, it will include. It is not total income and expenditure. It is total receipt and payment. The difference between income and expenditure is completely different. So the answer is false. Receipts and whatever I have written and present it in a way, same way you can present it in your examination. What you need to do? Question 1A, 3, true. Question 6, false. Receipts and payments account is a summary of all cash and bank receipts and payments over a certain period. This is a keyword. With the cash and bank balance at the beginning as well as at the end of the period. So it is not, if you want to add further points, it is prepared on a cash basis system. Everything, if you want to add, you can add it. Not an issue. Next, first 1, 2 questions we have solved, which is not there in your material. That's we have solved it. 1B is already there in your material. You can refer. 1C. Understand this carefully. I hope the question is visible to you, right?
Yes, sir.
Yes. The balance of missionary account of the firm on 1st April 23 was 28,54,000. Opening balance I am having at 28,54,000. Out of which a plant having a book value of 2,16,000 on 1st April 23 was sold. Okay, on 1st July 23 for 82,000. From 28,54,000, remove 2,16,000 from this, so that you will get one part of the missionary value, except the sold value, the continuity of the missionary, you will get it. And put 2,16,000 as the second, third, or fourth part of the missionary. On the same date, new plant was purchased. So on same 1st July, they have purchased the new plant. Fine. For 4,58,000 and 22,000 was spent as erection. That is their installation charges they have done. On that 1st September 23, a new machine was purchased for 5,60,000. Another new machinery they are purchasing. So 3 machinery you are having. So on the first machinery, we are bifurcated into fourth part. Okay. Depreciation is written off at 15% per annum under diminishing balance method. calculate only the depreciation value, not even any account. So what we are going to do, just listen this. Whenever you will get it, if you are having any space in your examination, just strike it off, move to the next page. Okay, whatever you need to present, the same way I have presented over here. 1C, what they are asking, give the same heading to them. Calculation of depreciation for the year ended 31st March 2024. Then particulars, machinery 1, machinery 2, machinery 3. This depreciation sold machinery, that is a part of the machinery. What they have given in the first part they have given 2,88,00,000, 28,54,000 is my opening balance. From that they said 2,16,000 is the asset sold. So we remove that part and we add that in a separate column as that value of the depreciation, the book value of that asset. So the book value will comes for 26,38,000. Okay, this is and all a book value. Okay, book value as on 1st April. Come. Then machinery 2 on 1st July 4,80,000. On 1st November it is 5,60,000. Everything came. Now, what is the depreciation percentage? The depreciation percentage is 15% per annum. Now, if you calculate 15%, don't forget, this is for a full year. Okay. This 1st July to 31st March only I can do. Okay. So it is going to be, the key point is 9 months. Then here from this point to 31st March, it is 5 months. This is for only 3 months. How this 3 months, sir? Because this asset is sold on July 1st. So April, May, June. So this 3 months will be there. So for the 3 months, we will charge 15%. For 5 months, we will charge 15%. For 9 months, we will charge 15%. If you do this calculation, it will become 3,95,700, 54,000, 35,000, 81,000. If you want, just pause the video and check it by using your calculator and then move on. Then final answer, how you will write? Total depreciation is equal to 1 plus 2 plus 3 plus 4. The total value will become rupees 4,92,800. Everybody understood? For this question, they have given for 4 marks. Everybody understood? Shall we move on to next one? Shall we? So we will move on to question number 2A, which is not, with some 6 points are there in material and remaining points is not there. So we'll try to do that problem. What they have given, Mr. Butt is trial balance as on 31st March 2024, did not agree, fine. The difference was put to a suspense account, that is also completely fine. During the next trading period, that is a key point here. Next trading period means after final accounts is prepared, you are finding out the mistake, you are identifying your mistakes. So in that case, P&L adjustment account will appear for all nominal items. For all nominal items, P&L adjustment account will get appear. First point, we will do analysis and we will go for a discussion. The total purchase book of 1 page 5615 was carried forward to the next page as 6551. In simple, purchase book is overcasted, right? It should be 5615, but it has done at 6551. So you will find the difference of 6551 minus 5615. What is the difference value? 6551 minus 5615.
936.
936. Very good. 936 is a value. Purchase book is overcasted. If book is having a mistake, it is only that affecting a purchase account. It is not affecting any other account. So the entry will be like, already it is overcasted. If it is overcasted from that originally, I need to reverse it to the credit side. So my entry will be 2 purchases it will become. Then on the debit side, I will put suspense account. So suspense account 936 to purchases account 936. Because purchases account is a nominal item, so I will substitute with P&L adjustment. So my final entry will be suspense to P&L adjustment 936. Okay, you should write it in such a way, the narration, correction of error by which purchases account was over debited last year 5615 carry forward instead of 6551. That's what we will do. Next, question number 2. A sale of 462 was entered in sales book 642 and posted to the credit of customer they have given. The sale has happened for only 462, but the sales book has shown 642. It has been overcasted. Sales book overcasted, what you will do? Actually, it should be credited. It is overcasted, so we will debit it by preparing a sales. What is the difference between 642 and 462? Find out the difference. 642 minus 462. You will get 180, right?
Yes, sir.
180. Fine. It has done. They said posted to the credit of customer. What is a journal entry for sales? What is a journal entry for sales? Credit sales. Let's say credit sales. It will be
Customer account to sales account.
very good. Customer to sales account. Actually, it should be there. For sales, I have rectified it. For customer, I should debit it. What I need to do first? Customer, I should debit it. So customer account, I will debit it by putting what is the value they have done? 642. Okay. Correct? 642. Okay. Then just a minute. So here we will continue. The customer account, customer to sales is a entry. What is a correct entry? 462. 462 is a correct entry. So I will first record 462 as a correct entry. Actually, it should debit. What they have done, credited. To cancel this, to nullify that entry, what I need to do? Again, I will debit it by 642 rupees. Add 462 plus 642. What is the value? 1104. Okay. 1104. 2. What are the other account I will prepare? I will simply put it in my suspense account. Add that value 180 to it. We will get 1284. So entry will be 180. Customer account will be 1104. Suspense account will be 1284. Because why here I change to P&L adjustment? Because sales is a nominal item. So I'll change it to P&L adjustment. Then come to question 3. Quickly we will do. A return to creditor 300 was entered in return inward book. However, the creditor's account was correctly posted. It is not affecting the creditor's account. It is affecting only the return inward account. Yeah, first, what is written to creditor? It is written inward or it is written outward?
Written outward.
Very good. It is written outward. What is the original entry for written outward? What is the entry for written outward? It means purchase return. Correct?
Credit
So
of
the
the
written
purchase.
purchase 300 was entered in written inward book. However, the creditor's account was correctly posted. For that, you can directly go for an answer. That is, the entry will be like suspense account to P&L adjustment account. So I need to nullify that entry. For that purpose, I need to put 600 over here. Because the 300 is an error, again I need to rectify it, so I will post it by 300. Next, fourth one. Cash received from Geet 895 was posted to debit of Meet. Received from Geet, the entry will be cash to Geet. That will be 895. 895 should be there. Was posted to debit of Meet. They are posted to debit of Meet. It means Meet account 895. Again cash account 895. Okay. You should reverse this entry. How you will reverse this? 2C, 2 Meet 895, 895. Debit cash, credit cash will get cancelled. You will get 2 Geet 895, 2 Meet 895 on the credit side. Okay, the debit side will be a suspense. Suspense account 890, suspense account to Geet to Meet you will put 895, 895. You will add this value and you will put as 1790. Then question number 5. Question number 5. Goods worth of 1400 were dispatched to a customer before the close the year, but no invoice is made. It means no entry has been passed. What is the entry for goods worth were dispatched to a customer? What is the sales entry? That's it. What is the sales entry?
Customer to sales.
Customer to sales. Sales is a suspense. So sales is a P&L adjustment. Entry will be customer to P&L adjustment 1400, 1400. That's what I have written. Customer to P&L adjustment 1400, 1400. Next. Sixth one is an interesting key point which you need to discuss. Goods worth of 1600 were went on sale or return basis to a customer entered in the sales book at the close of the year. Final. Okay. The customer still had an option to return the goods. The gross profit margin was 20%. So goods worth of 1600 were sent on sale or return basis. Previously it was there, no sale on return basis, consignment, account current is there. Now they have removed it. I don't want to go deep into that part. So the entry will be like your sales to 20% was written on the basis and entered in the sales book at the close of the year. That's what the entry will be. At the close of the year is the key point over here. Okay. So this entry has been passed at the end of the closing year. So you need to, what you need to do? First entry, what you will pass? I will tell you. I will go for a working and then I will come back here. I will do my working. First entry will be for 1600 we need to do. On the 20%, how much is on 20%? How much is 20%? 1600 into 20% is 320, right?
Yes, sir.
320. 320 is a GP margin. From 1600, if you subtract 320, 1280 is the cost of the worth of the goods. So the entry will be P&L adjustment to customer account by passing 1600 you will pass. For that wordings, they have given no close of the year, something they have given no. For that, we need to pass a closing stock entry. The closing stock entry will be inventory to P&L adjustment. For this 1280, that sales value we will do 1280, 1280. So if I want to pass in one single entry, I will pass. Here P&L adjustment debit, P&L adjustment credit is there, right? So P&L adjustment debit 1600, P&L adjustment credit 1280. Instead of debiting two accounts, I will simply debit 320. Shall I simply debit 320? So entry will be P&L adjustment account debit, inventory account debit to customer account. It will be 320, 1,280, 1,600. For that full purpose, I can show. I will prepare in two different ways. Here I will prepare in first type. If you want to prepare in a combined entry format, you can still prepare in a combined entry format. Okay. Next, seventh one is not there in material. First, 500 due from Mr. Manas was omitted to be taken from trial balance. Due from Mr. Manas. What is the entry? Due from Mr. Manas. It means I need to receive it, right? Is it right?
Yes, sir.
What is the entry it will be? Manas is the debtor. Okay. Debtor account I will debit. Manas account debit to accrued income, which I need to, or which I need to yet to be received, right? I need to be treated as income. So the entry will be like Manas account debit to suspense account I will write, because I don't want to put another account which I received or not yet received. So it is still there. Still I will create a temporary account called suspense account, or either I will put trade receivables account. In any way I can put it. Then last entry under the rectification of error is sale of goods to Mr. Deep was 6,000 was omitted to be recorded. It has been omitted to be recorded. You have completely omitted that. But you need to record it. Just simply record it. Trade receivables to sales. So now it will become trade receivables. What is it? Yes, trade receivables to sales. Now it has become deep to sales. Finally, it will become deep to P&L adjustment. 3,000, 3,000. 3,000, 3,000. Now, take a calculator. We'll do a quick calculation. Final entry you need to pass. In that question, the critical point which you need to be noted is this one. Ninth entry, which is we need to pass that ninth entry. P&L adjustment to but. It can be but capital account debit to P&L adjustment. For this question, it is P&L adjustment to but. For that, I will tell you one thing. First, what you will do, simply prepare P&L adjustment account. Okay, give me what are the debit values we have entered. First one, credit 936 we have entered. 936, 180, 600. 936, 180, 600. We'll just simply do a ledger posting. Okay. Then 1,400, 1,600, 1,280. 1,400, 1,600, 1,280. Then 3,000 on the credit. Okay, 3,000 on the credit. Now if you tally this, now just tally that point. Tally the value. What is the total for that value? 936 plus 600 plus 1,400 plus 1,280 plus 3,000. If I am not wrong, you will getting 7,216. Is it right? Everybody is getting that value.
Yes, sir.
So if you subtract, what is the value you will get? It is 5,436, right? This is 5,436, right?
Yes, sir.
Next, we'll go for 3B. The 3B is simply in 2 or 3 methods we will prepare. I don't do much time on that discussion. I completely discuss this and I will quickly go for that answer part. They have given a bank passbook of 7749 of Mrs. Tina showed a overdraft value of 1,34,300. So it is 1,34,300 is an overdraft value it has showing. On throwing the passbook, the accountant has found. So here it is simplified that you are going from passbook to cash book. First point. The first point, they have given a check of 4,320 and the passbook on 31st March is been dishonored, is debited again in the passbook on 1st April. There was no entry in the cash book on 15th April. So it is not affecting, see whether it is affecting the 31st March or not. So it is not affecting the 31st March. It is post 31st March. So we will pass no entry for this first one. Next, the bankers had credited an account with 11,200 for interest collected by them on her behalf, but the same has not been entered in the cash book. Okay, see what is there? Cash book la entry podla. So they have not yet passed the entry in the cash book. Okay, so we need to pass it. At the time we can do with that value. This is a one-way calculation. Or I have made the already I made a shortcut video for BRS at the time. Which book they have entered, that we need to check it, and then based on that we will prepare that account. This is another way. So it is only affecting 11,200 in simple bank interest directly putting in a bank account. It is not there in a cash account. I need to enter in a cash account. So I will debit it. That's it. If you see the first point, well, how will you write it? BRS as on 31st March 2024. Bank balance debit as per bank passbook. Okay, that is 1,34,300. First entry, no adjustment required as there would be no differences on 31st March 2023. Now, second point, no entry in the cash book for interest collected by the bank. Okay. So that we will add 11,200 because the starting point here I am having debit. Here debit, debit having a same sign. So I will add it. Next. Out of 8,200 paid by Mrs. Tina in cash and by checks of rupees 31st March, check amounting to 30,000 were collected on 7th April. So they have passed the entry in the cash book, but they have paid. But the check amounting they were collecting at on 30,000. It is affecting only 30,000. We need to only focus on that 30,000. It will be debit credit because we need to collect it. So it will be credited. Amount debited in cash book for pending checks in collection, but not credited in the passbook. The amount is 30,000. We need to subtract. Next, out of check, debit to 31,200 drawn by her. That's what we have done. No, drawn by her on 27th March. A check of 10,000 was encashed on 3rd April. It has happened only on 31st March above, but it has not passed. We need to give an effect of rupees for this 10,000. So we will give an effect for the 10,000 by adding it debit, check credited in cash book, but not debited in passbook. So it will be 10,000. For this fourth one, we need to prepare the 10,000. For fifth one, yes, many of them are asking some doubts to over it. I'll just get it to that. For solving a BRS, we are having two methods. One is which account we need to enter the transaction, that we will see. Or the other case will be which book it already had a effect. This is another way. I will follow this way. For this way, if I want to tell debit, credit, credit, debit, 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 credit, credit. This two will be one bundle. This two will be one bundle. Debit, credit, or credit, debit, we will add it. Debit, debit, credit, credit, we will less it. Here, the first point which we will there is your starting point. Here, the starting point, that overdraft balance as per that. That is your starting point. From that, we will take a discussion whether we need to add it or whether we need to subtract. This is a one way. Whatever the method you learn, some of them will go with the hands method. Whatever the method you will learn, you can easily do it by that method. Next, we'll go for the fifth one. Banker seems to given a wrong credit of 2,000 paid by her in account and wrong debit in respect of check. One is on wrong credit, one is on wrong debit. So we need to rectify this. Wrong credit, we will reversal by adding. Wrong debit, we will reversal by less. Okay, just I don't want to confuse you, so that I will remove this part. Yes. Next one. Sixth one. A check of rupees 4,000 entered in a cash book but omitted to be banked. It has already entered in the cash book, but it has not entered in the passbook. So we need to enter it. So what you need to do? Check of 4,000 entered in cash book but omitted to be banked. That 4,000 we are going to subtract it because it is affecting that passbook. Then seventh one, a bills receivable. Mark the word, it is bills receivable. 20,800 previously dishonored, already dishonored. Discount of 800 with the bank and has been dishonored, but the advice was received on 1st April. So it means on 20,800, it has been dishonored, but no dishonored as entry has been passed. That's what the dishonored, when they will came to notice only on 1st April. For that, we need to do a reconciliation. For that reconciliation, we will subtract this 20,800. How will you write it? Discounted dishonor, but not entry in the cash book, because dishonor entry is already passed by the bank. Okay, when only we will go and check by putting in the cash book. Next, the important 8th and 9th one. A bill of rupees 40,000 was retired paid by the bank under a rebate of 700, but the full amount was credited in the bank column of the cash book. Actually, in cash book, if you see, it will be 3 columns: discount column, cash column, and bank column. I need to put 39,300 in the bank column. What I have done? 40,000 I have passed. In discount only, I need to put 700 because it is a rebate. Rebate means it is a discount. Okay. So that 700 I need to give an effect by putting rebate on bill retained, not entered in the cash book, 700. That I will add it. Next, a check of rupees 9,600 deposited into the bank but omitted to be recorded in cash book and was collected by the bank on 31st. It has been omitted to be recorded. So it has been added check deposited in the bank but not yet recorded in the cash book. That is 9,600. If you calculate all the values, add and subtract all the values over here, your final value will be 1,07,800. 1,07,800. It is having a positive, so it will write down balance as per cash book. If you want to write credit balance as per cash book or overdraft balance as per cash book, you can write it. Finally, you need to write a note wherever necessary. Note should be there. Note should form part of your answer. A check of rupees 4320 credited in passbook on 28th March and later debited in passbook on 1st April 24 has no effect on BRS as at 31st March 2024. That's for first one. No adjustment we have passed now. For that we are writing a notes. So that's it. We have spent almost 40 minutes for this two discussion. Okay, for this two types. And then we'll quickly go through the 3A. Okay, 3A will be based on Lucky does not maintain a proper books of accounts is transactions, you need to prepare it. Finally, all the values they have given. But the point here is debtors closing value I need to find out. Creditors opening value I need to find out. Bank balance opening I need to find out. So by understanding this 3 is going to become your balancing figure answer. Okay, I will tell you this concept beautifully. So let us understand this. Okay, these three things are going to be in your balancing figure. So you need to prepare working note 1, working note number 2, working note number 3. Wherever necessary, we'll prepare. Fine. Next. Details of bank transaction were as follows. Received from debtors, affecting debtors account. Okay. Additional capital brought. It will only affect the balance sheet. Sale of fixed assets. For that, if there is any sale of fixed asset, we will prepare in a working note number 4. Paid to creditors, affecting creditors account. Expenses paid, affecting P&L account. I will take it as a general expenses. Personal drawings, affecting balance sheet. Purchase of fixed asset, working note number 4. Or what is a fixed assets, what I need to prepare, that I will prepare. They given that no cash transactions took place during there. It means everything will be on which basis? Credit basis. Okay. Goods are sold at cost plus 25%. 25% profit margin is there. They given the sales value. Instead, they have given COGS value. Cost of the goods sold value is 2,60,000 is the value. We need to find out the selling price. We need to find out the gross profit margin. For that, we will go for a calculation. So this is a simple question, but it is a 10 marks. We need to prepare a working note. Almost 5 working notes is needed. And if you notice in this question, they ask us to prepare, you are required to prepare his final accounts for the year. Final accounts for the year means trading account should be there. P&L account should be there. Balance sheet should be there. This everything should be there. For preparation of a balance sheet, I need a capital. For that capital, I will prepare opening balance sheet or the balance sheet of the previous year. Everything I need to take in care. For that question, almost 5 working notes will become along with trading, P&L, balance sheet. This everything you need to complete within a span of 18 to 20 minutes. So we'll go for a discussion first. We'll quickly go for a discussion. Okay, we have everybody is understood, right? This is your opening value. This is your closing value. First let us understand this. Whatever is there. Already I made a video called single entry system for Sudoku on accounting. How you need to approach that single entry problem, how you need to do the account from incomplete records. That one complete question I have done it. Those who want to revise it, you can revise it in that video. So for this question, whatever is given in that first box, go for a question. I will directly explain you. And then I will go for my answer, how I written it. Debtors account, opening balance. Post it on the debtors account, debit side. Creditors account, closing balance is given. Posting on the creditors account, debit side. Closing balance, no. It is creditors account plus on the debit side, you will write down to balance carried down 46,000. Stock, opening inventory is also given. Closing inventory is also given. So opening inventory will come in your trading account debit side, and in the same way opening inventory will come in opening balance sheet asset side. 62,500 is your closing inventory. Closing inventory will come in current year's trading account credit side and current year's balance sheet on the asset side. Bank balance opening, leave some space on the debit side. By 2 balance brought down, leave some space and write down 50,000 is given as a closing balance as on 31st/12/2023. Write down as a to buy balance carried down on the credit side. Then fixed assets is given. Fixed assets opening value is given, brought down value, carried down value 9,000 is also given. Just put it in those 5 accounts. That is, debtors account is you need to prepare, creditors you need to prepare, fixed assets account you need to prepare, bank balance you need to prepare. After that, to finding out of capital account, I will prepare bank balance. I will prepare balance sheet. This 5 working notes I should first prepare it. Then received from debtors. What is received from debtors? The entry will be like what? I have received from cash, received from debtors. It will be cash to debtors, right? So the affecting bank account and cash account. Sorry, affecting bank account and debtors account. Here, the one key point which I need to discuss is, if the question suggests you to prepare bank balance, all the entries will be like bank to debtors, additional capital brought in, bank to capital account, sale of fixed assets, bank to assets. Like that you need to prepare. Okay. Then sale of fixed assets value 1,750, 2,500. You are making a loss on sale of fixed assets. Then paid to creditors, expenses paid entry, you will simply pass. Paid to creditors entry will be like creditors to bank, expenses paid, expenses to bank. Personal drawings entry, the personal drawings entry will be drawings to bank. Purchase of fixed assets, I am purchasing a new fixed assets, entry will be fixed assets to bank. Everything is affecting a bank account. Okay, twofold effect you need to give it. No cash transactions takes place, so it is going to be a no cash take place. Okay, the purchase, why that specific information is given? That specific information is given to find out, you don't want to find out the cash purchase and cash sales. For that purpose, they have given that. We'll directly go for a discussion part. Okay, I don't want to take too much time on that part. So what here, the important point you need to write down is, you will write opening inventory, yeah? You will write closing inventory, yeah? Cost of goods sold they have given a 25% is a profit margin. So you need to add plus 25%. So 2,62,000 into 125 I can do. Or this is a one way. Or in a calculator, 2,60,000 plus 25%. In any way you can do, you will get 3,25,000. Same way, 25% is a gross profit margin. From 2,60,000 is the cost of goods sold. I will calculate 65,000 over there. Just a minute. Here, gross profit is 65,000. You will record now. Here there will be a two-way for calculation. Either you can do 3,25,000 into 20%. What is this 20%, sir? 25% is on the cost, right? What is on sale, you will find out. It is 20%. If it is 25 by 100 on cost, it is 25 by 100 on cost. In simple, if I want to tell, cost plus profit equal to sales. Cost is 100, profit is 25. It will become 125 over here. So if it is cost, it will be 1/4 of cost, which is equal to 1/5 on sales. If it is 1/5 on sales, shall I say it is 20%? So that's what 3,25,000 into. Here I will consider the sales price. Here I am consider the cost of goods sold value. In any way you can do. Both the way the answer will remain same. Are you able to understand? Next, closing inventory. In that question, beautifully, you will arrive at purchases balancing figure value. Not preparing your creditors account, you will get the purchases. You will get the purchases by preparing a trading account. Why? I will tell you. Because in creditors, closing value is already given. I need to find out the opening value. This purchases value, number 1, I will post it in my creditors account. Okay, I will post it in my creditors account. What I will do? I will go for my creditors account. And then I will post 2,72,500 on the credit side. Okay. Next, the expenses paid you will enter, gross profit you will brought down, the loss on sale of fixed asset, the difference between 2,500 and 7,150, you will record it as a you will record it as a 2,500 minus 1,750. You will record it as a loss on sale of fixed assets. That loss on sale of fixed assets, you will debit it in the profit and loss account. Then depreciation is there. We need to find out. So that is there any depreciation? We will find out. And then for that purpose, I will go for working note one. Here, I have intentionally prepared a working note in such a way, all the ledger completed and then balance sheet. In some of the problem we have discussed in the class, first I will prepare a balance sheet. At the time, I know all the balances at the time I will easily prepare. Here, I don't know what is the opening cash balance, that opening debtor, some values are not known. So I need to prepare that some ledger account. From that, I will only prepare a balance sheet of the opening capital. So that what I will do, first I will prepare all the ledgers. Fixed asset, opening balance is given, closing balance is given. This is a sales asset, 1,750. This is loss on sale of fixed asset, 750. This 5,000 is that machinery which has purchase of a fixed asset, no? This adjustment they have given, no? Purchase of fixed asset, that adjustment. Purchase of fixed asset, investment, they have fixed asset they have given. So your depreciation value is a balancing figure. Don't expect you to give the percentage value. Without finding out the percentage, you are finding the depreciation value. So it is not necessarily that in the question you need to have given they need to given you a percentage value for the depreciation. It can either such a way that they will give a opening balance, they will be giving a closing balance, they will give you a sales value. You need to find out the depreciation value. In any way it can happen. So you will prepare that account and you will post it. You will post it in the depreciation 1,000. By preparing that simple working note number 1, you will come to a conclusion of a net profit 14,000. By preparing simple working note number 1, you will come to a conclusion that net profit is this by simply posting it. Nothing account will affect, right? Next, balance sheet, opening capital, I will leave some space. Additional capital is already there in the question. Net profit, I will there in the question. This part, I will written at last. I will leave some space and then I will come and after complying all the 5 working notes and then I will put it. Add additional capital, add net profit, everything. Drawings is there. I will put it. Credit as closing value is there. Yes, credit as closing value 46,000 they have given. So I will post down 46,000 also. This is done. Fixed assets, closing value they have given. Inventory, closing value, closing inventory value. Bank balance closing values also they have given. All the 3 values I have posted. In simple, I need to only post the debtors value. Okay, it will be very simple. My next due to you, I am preparing working note number 2, working note number 3, working note number 4, working note number 5. All these working notes, what I am preparing is only to complete my balance sheet. Okay, so what I will do, I will go for my working note number 2. Working note number 2 will be on bank account. Why it is a bank account? We want a opening balance. So whatever I received through my bank, I will credit it. Whatever I made a payment, I will credit it. Whatever I have received, I will debit it. The difference is going to be my opening balance of a bank. This opening balance of a bank will go to balance sheet on the asset side. balance sheet on the asset side. Next, fixed assets value 7,500 opening we will do. Debtors opening value they have given, we will post it. Stock opening value they have given, posted it. Okay. Then come to working note number 3. That is debtors. Why there is necessary to prepare debtors? To find out the closing balance. That closing balance will go to closing balance sheet on the asset side. Opening value they have given. Sales, I will take it from trading account. Bank, that is a cash received from customers. I will put it as 3,40,000. The difference is 87,500. That will go to balance sheet on the asset side. It will go. Then creditors account, opening value I need to prepare. For that closing entry I will pass. Payment to creditors I will record it on the debit side. Purchases from trading account, because why I directly put credit as a total my purchase, because they say that no cash transaction take place during year. It means completely it is going to be credit purchase. If it is completely going to be a credit purchase, I will directly put it in my given effect on the creditors account. So my balance will be 53,500. This brought down value will affect my opening balance sheet, not my closing balance sheet. So because it is a brought down value, it is only affecting my opening balance sheet. I'll go for my next working note, opening balance sheet I will prepare. If I put it, I will get the answer of 1,69,000 as my opening capital. Are you able to understand? This opening capital will go for 1,69,000. This closing balance will be taken from working note number 3. Okay. If you balance it, it will become 2,09,000, 2,09,000. For very simple problem. ஒரு சின்ன விஷயத்துக்கு என்ன பண்ண வேண்டியது இருக்கு பாரு. Working note எல்லாமே ப்ராப்பரா போடணும். If you prepare all the working notes one by one, working note 1, working note 2 will have 1 mark, working note 3. Each working note will have minimum 1 mark in that question. 2.5 marks for trading, 2 marks for trading account, 2 marks for P&L, remaining 2 marks for your balance sheet. The balance sheet posting will carry minimum 1 mark to 1.5 mark, maximum 2 mark. All the working notes will carry the major mark weightage. Are you able to understand this question? Are you able to understood?
Yes, sir.
Yes. We will go for our last, I think so, it will be a last discussion, last before discussion, I think so. Yeah. Arun, Varun, and Tarun are a partner sharing profit and losses. Tarun died on 30 June 2023. The balance sheet of the firm on 31st March 2023, they have given. All the creditors value they have given. General reserve they have given. So this creditors will go to the balance sheet. General reserve go to capital account. Capital account will go to capitals. Land and building, any revaluation, investments, any revaluation will be there. This provision for doubtful debts will put it in a revaluation account. Everything will put. This cash in hand and cash at bank account. If it needed, if it requires, we will prepare, or else we will remove, avoid that. In order to arrive the due to Tarun, it is mutually agreed that land and building was revalued at 1,75,000. The difference is 15,000. Debtors were all good, no provision is required, but we are having a credit side item of 2,000. So we will post that 2,000. Stock is valued at 13,500. That 13,500 is 1,500 is reduced. Here the asset value has got increased. Then goodwill is, this is an important key point, this 4th point. Goodwill is valued at 1 year purchase. It is simply 1 year on the average profit of past 5 years they have given. So it is past 5 years. Tarun share of goodwill will be adjusted in account of Arun and Varun. Arun and Varun will take care. If it is at the death they will take care in which ratio? Gaining ratio. Okay. Next. 5th point is another interesting point which you need to notice. Tarun share of profit from 1st April 23 to the date of his death. What is the date of his death? 30th June 23. So 30th June 23. 30th June 23. How many months? April, May, June. April, May, June. 3 months. 3 months. Tarun share of profit for those 3 months calculated on the basis of average profit preceding 3 years only. So preceding 3 years means 25,000, 20,000, 22,500. If you add all this and calculate for 3 by 12, okay, divided by 3 into 3 by 12, you need to do. Okay, and then I will get an answer, and then I will get that share of profit. What is his share of profit? For that share of profit, I will want to give it to what is the share of profit is equally. So it is going to be 1 by 3. So that's what the calculation will be. How this fourth one will be calculated? We will roughly calculate how you need to present it in your examination. I will tell you. Valued at 1 year purchase of past 5 years. Take all these values in your calculator. Do what I say. Those who are watching this video in the YouTube also calculate it. 25,000 plus 20,000 plus 22,500 plus 35,000 plus 28,750 is 1,31,250, right? Divided by 5. You will get 26,250. 26,250 is an average profit. They are asking goodwill on average profit, 1 year purchase. So it is 26,250 only. Into 1, you will get 26,250. So that's it, your goodwill. That is the company's total goodwill. What is his share of profit? His share of profit is 1 by 3. Calculate 1 by 3. It will become 8,750. This 8,750 will be divided in the ratio of Arun versus Tarun. So it will be divided by 2. 4,375, 4,375. That's it with the goodwill calculation. In this point, if you're able to tackle fourth one and fifth one, this sum will be a cakewalk. 4 and 5. Then one more point is this provision for doubtful debts adjustment. This 2, if you want to take care, remaining everything will becomes easier for you. So that's what I have done it for you. And when every new page, I will start a new question. Question 3B, revaluation account. You will do a simultaneous approach. Here for our discussion, I am not doing a simultaneous approach. Here it is not, I am solving MTP. I am just doing a discussion with you. So you will do a simultaneous approach. Simultaneously, you will prepare evaluation account, partners capital account, and then you will prepare balance sheet. Simultaneously, you will open and simultaneously you will prepare it. Stock 1,500 debit. This land and building, how much it got increased? If I'm not wrong, yes, it is 25. What I have done. Rupees 25,000 has got increased. Okay. Then provision for doubtful debts, the 2,000 you will give an effect. So total it will become 27. On the 27, if you subtract 1,500, it had began 27,000 minus 1,500, it will become 25,500. 25,500 divided by 3. If you put, it will become 8,500, 8,500, 8,500. This will be transferred to partners capital account. So partners capital account 8,500, 8,500, 8,500 you will record. Then partners capital opening balance you will record. Opening balance you will record. General reserve you will bifurcate equally. Okay. That's it. Remaining, we will need to go over a working note. How you will find out this fifth one, Tarun share of profit for last 3 years. Last 3 years profit you will take, divided by 3 is an average. From that you will calculate 3 by 12 for 3 months. And that is the total profit for that 3 months. For those 3 months, you need to find out the Tarun. Tarun is a person, right? Tarun share of goodwill for that matter. So it will comes around 1,875 for that profit which has generated for that 3 months. It is 1,875. Okay. Then you will go for a working note number 1. I will neatly presented average of last 5 years for year ended 31st March 23. 19, 20, 21, 22, 23 is given. All the values I put total. From that, I will find out the average profit. From that average profit, I will find out the goodwill. From that goodwill, I have prepared Tarun share of goodwill. That is 1 by 3. That is totally 8,750. that should be divided by in the form of gaining ratio. Gaining ratio is nothing but 1/2 and 1/2, 4375, 4375. So this 4375 is a gaining ratio. So they are going to take it. So the entry will be A's capital, that is Arun's capital, Varun's capital, to Tarun's capital it will be. So on Arun's capital, I will debit 4375, 4375. To Tarun's capital in total, I will credit it 8750. All the posting has been done. So they said nothing has mentioned about that person, whether we are paying it on loan. So we will transfer it to the Tarun's executor account. It means we will assume if you have enough cash, you will assume we are paying it. Okay, it will be, there will be two assumptions if you want to take. If you want to take, you can take it, you can transfer it to loan account, or you can assume it and you can transfer it to an executor's account. So here you can 998125 will be a to Tarun's executor account, or if you want to write it again, Tarun's executor loan account. If you want to write, you can write it Tarun's executor loan account. Remaining, if you balance, you will get 108125 83125. That's your balance carried down value. That balance sheet, Arun's capital, Varun's capital, I will put. Tarun's executor loan account, I will write. That is 98125. Tarun's executor loan account, I will write 98125. Then creditors value, as usual, 20,000, I will write. This is our revised value of that trade receivables, P&L adjustment. P&L adjustment needs to be shown because it is a temporary account. We have created P&L adjustment or suspense account. So we need to show it. Cash in hand and cash at bank, we need to enter it. So that's it. With that, for 3 B. Then 4A, 4B is there. There's only a 2 question. First, we will see 4B and then finally we'll come to 4A as a conclusion part. Okay. 4B is simple question. Shall I tell you one thing? This is your 12th standard question. If you believe me or not, it is taken, it is that much easy to score you from your 12th standard. Either it is a state board or either it is a CBSE. In both the cases, it is taken from your 12th standard study matter. Basic concept, very simple concept has been there. Okay, so it will be like 6,75,000, 10,12,500. Opening value is given, closing value is given. They are asking us to prepare amount of subscription on sports material that will appear in income and expenditure account for the year ended only. They are asking. They are not asking us to prepare income and expenditure account. They are simply asking what is the amount of subscription appear, what is the amount of sports material appear in an income and expenditure account. Once you listen this, what you need to come to your mind, if it is an income and expenditure account, we will prepare on accrual basis. If it is an accrual basis, for that current particular year, whatever the expenses we have paid, whatever the expenses we yet to pay, whatever the incomes we have received, what are the incomes which you yet to be received, which is for the current year, we will record it. And in the same way, also show how this items would appear in the balance sheet. It means they are not asking the entire balance sheet. They are asking an extract balance sheet. They are asking you. Okay, they have given that information. Opening, closing information, opening stock, closing stock of material, opening amount due. That is amount due. It's a sports material which you will, the Zara Club, no, the amount which you will, that is 6,700, 6,07,500, 8,77,500. Subscription due. Subscription due is something which you yet to receive. Okay, that is subscription is an income nature, right? Receipt nature. You yet to receive, that is your outstanding. Okay, income is outstanding. Subscription received in advance, you have already received that amount. You need to give services to them, or you need to provide a services to them. So you need to have an obligation to them. So it will be act as your liability. So opening, closing, that everything value we will do. Okay, a subscription received during there. This received have a very crucial sense. It has include everything. Current year, previous year, next year, include everything. From that, we need to remove all the previous year and the next year data to arrive at the current year figure. Payment of sports material is given. Fine. Go for a discussion. I will do it in a quickly manner. 4B is something, whatever I write it in a black color, black ink pen. That's how you need to present it in your examination for this question. Whatever I write it in violet color, that is a one-way approach. Whatever I write it in a red color, that is how another way approach. If that same question has been come for your working note in your examination, let's assume it comes for a working note in your examination. At that time, you can reduce it to a short form: closing outstanding, opening pre-received, like that. PR means pre-received, OS means outstanding. Okay, whatever a subscription received during, you will add two things. One is add closing outstanding, that is for the current year we will add opening pre-received, the received amount which is for the current year, which is received in the previous year. The two value we will add it. Okay, then subscription receivable in the previous year, which is received in the current year, which is not related to the current year data. So we will, in income and expenditure, we will less it. Subscription received in current year, which is for the next year, which is not relevant to the current year, right? Even though I have received here, I am following accrual basis, that too for the current year items. For that subscription received for the next year item. So I will subtract it. These two items I will subtract it to arrive at my total value. Can you give me the total value? What is this total asset value? Can you give me? 4 lakh, 1,48,500 plus 81,000. 2,29,500. 1 lakh, 1,48,500 minus 30 lakh, 33 lakh 75,000 plus 2,29,500 minus 1,48,500. I am getting 34,56,000. Everybody is getting the same. Is it right? Yes. Next, come to sports material part. Opening stock sports material, it will be opening plus purchases minus closing. That's how it will be. Here, I know opening and closing. Payments made to the sports. Okay, so what I will do, payment of sports material. From that, this payment may be for everything. So what I will do, the payment of sports material, from that I have less opening to make a reverse calculation. Less opening, add closing to arrive at a purchase of sports material. Okay, if you do that, if you do a posting, you can get it. Next, I actually required in income and expenditure account, I need to post only the sports material consumed. That sports material consumed will be opening stock of sports material plus purchases less closing stock of sports material, if you want to do it. Just because here, if you note down, this is a outstanding value, amount due for sports material, okay, which I need to make it. Okay, payment, the total payment which I make. Amount due for SM means sports material on 1/4, that is opening that I will subtract, add amount due for a sports material, that is for closing, I will add to arrive at the what is the purchase of a sports material that has happened. From that, I will subtract the value 6,75,000 plus 22,95,000 minus 10,12,500. If you do, it will come for 19,57,500. This is done. Then what you need to do, balance sheet of the Zara Club. This is your current year pre-received. Amount due on stock material is your closing outstanding. Subscription receivable is your closing outstanding. This is your closing sports material. Closing stock of sports material. Both the thing, no explanation to tally it. And you will write down, importantly, you will write down and extract of the balance sheet you need to write down. Okay, you should write down on extract of the balance sheet. Okay, then we have left with final question. That is 4A. Amar and Akbar and Anthony are in a partnership. The following is their balance sheet as on 31st March 2024, which was dissolved, their partnership. They agreed to share in the ratio of 5:3:2. Okay, all the values are being given. It was agreed to repay the amounts due to the as and when the assets were realized. Twice, April 15, they are realized first time. This is your second time. This is your third time. They are realizing they are getting their payment. Prepare a statement showing how the distribution should be made under a maximum loss method. Okay. Under the maximum loss method, this is the one way. I will give you one more thing. Prepare as a bonus content. Prepare realization account and capital account from that given value. How you can do? You will see maximum loss method, right? From that, how you can prepare a realization and how you can prepare a capital account. That we will see. Okay, that is a bonus content for you, especially those who are attending the live. You will have a good interactive session with us. Go for an answer. First one is which one? Maximum loss method. Ammar's loan, Creditors, Akbar, Anthony. All the value I will write down. From that, first time I am getting my cash of 60,000. What is the first priority given? I need to pay to my creditors. That creditors 60,000 I will pay. I have left with 20,000. That 20,000 I need to pay to my other partner who have given the loan. Amma's loan 20,000 I have paid. So everything has done. 20,000. The balance due of 20,000 is already been. Sorry. Wait. Here what I have done. Yeah, we have realized 60,000. We paid 60,000. For creditors, we need to pay 20,000. Ammar's loan, we need to pay 20,000. Ammar account capital, 1,30,000, 90,000 we need to pay. This is your balance due. Okay, this is a balance due amount which you need to make it. Okay, fine. Next, come to that part. Second time I am realizing. This is your first time you are realized. This is your second time you are getting an amount of 1,46,000. From that 1,46,000, from 1,46,000, the first preference will pay you the creditors 20,000. Second preference will go for the Ammar's loan account 20,000. So the total value 20,000 paid. I have only left with the capital value. That is a balance due. Okay. From if I calculate minus 40,000, I will get 1,06,000 as a value. This is a 1,06,000. So what I will do, I will need to find out this value. First, I will make this total. What is this total? 2,10,000, right? 1,90,000. It will become 2,20,000. From the 2,20,000, I will subtract 1,06,000. I will get 1,14,000 as a possible loss. From that loss, I will bifurcate in the ratio of 5:3:2. If I raise in the ratio of 5:3:2, it will become 57,000, 34,200, 22,800. Next, on that 43,000 is there, 4,200 deficiency is there, 67,200 is there. He is having a negative value. This has to be taken by the partners in their. This has to be taken by the partners in their. In their continuing ratio. So this 4,200, who is continuing? Amar, who is having a positive value. This 4,200 will be taken care in the ratio of capital ratio. Capital ratio is nothing but 1 lakh is to 90,000. That is 100 is to 90. So 4,200 divided by 190 into 100. You will get 2210.52. You will get. You will round it off. Okay, actually you will get 2210.5263 you will get. Try to round it off. Okay, maximum try to do a rounding off. Okay, you will do a capital ratio. Then you will arrive at a positive value. So this is your first cash need to be paid. First preference A and B you need to pay. Then how you will find out the balance 3? 1 minus 2. That is a balance due you need to make a payment. From that, last realization you get 94,000. What you will do? Add all this. Okay. Add all this 59,000, 30,000, 24,000. From that, subtract 94,000. You arrive at 20,000. This 20,000 bifurcate in the ratio of PSR, profit sharing ratio. From that PSR, you will get 10,000, 6,000, 4,000. Everything will become a positive. So this is a second cash paid. So what is the maximum loss they can realize? This is the loss on realization. Asset I am going to solve, I'm going to pay my partners, other liability, everything. Whatever left or whatever is showing negative, that is a loss. That loss has to be taken by the partners. That has to be bear by the partners. So here, what is the cash paid? The cash paid is 49,210, 24,000. These are the two cash paid items. The cash paid items, I will mark it in different color. These are the cash paid items. Okay. This cash paid items in realization, we need to show it on the credit side. Credit side realization, we are making a payment, right? We need to show it on the credit side. Okay. Next, balance of loss on realization, the 10,000, 6,000 and 4,000. What you need to do? If no further realization take place, then Amar, Akbar and Anthony will bear a loss on realization of 10,000, 6,000 and 4,000 respectively. That's what they give. Then I will give you a bonus thing. What is it? Realization account and partners capital account. Sir, where is the answer, sir? Just a minute, wait. That's all. Answer is done. What you will do? First, creditors payment 60,000. Second, creditors payment 20,000. Amar's loan account 20,000. Amar's capital 40,750. Amar's capital. Amar's capital. Then Akbar's capital and Dinesh capital. This and all what, sir? Is nothing but whatever the value I am circling in red color, that is a value. Just a minute. You will get 60,000 of 1. Then payment 2, 3. This is what they have done. No, 60,000, 20,000, 20,000. Then come to this one. 40,000, 40,790, 65,210. So 40,790, 65,210 is a payment which you are going to make. That is your cash account. Okay, cash account on the credit side. Next, cash credit. 49 to 10, 24,000, 20,780 is the second payment, cash payment. You are realizing account. In realization account, you will show it in a way. This is under all assets, you will debit it. This is under all assets, you will show it. So this both will get tally, right? So the realization account 60,000, 1,46,000. This is a 3 account which they have given in a question. Like this one, this 4 things. Okay, this 3 things, 60,000, 1,46,000 and 94,000 will record. Both will get tally. Then means you are doing a proper thing. Then how I can put it in a capital, sir? It's very simple. Give interest towards this question. Those who are feeling somehow boring, just keep listen. This is the last part of our discussion. Partners capital, opening capital value we will return. On that, this is and all is on the credit which they have paid to us. So on that partners capital, we are going to make a payment to them, or they are taking it from us. First payment, 2 cash in 2 cash. Second payment, 49 to 10, 24, 20,780. Whatever the balance is there, that is your realization. Suppose in your examination, whenever maximum possible loss method is given, and then they are asking us you to prepare cash account and partners capital account, you can prepare in this format. Here, just change it to cash account. Here also change this to cash account. Okay, cash and capital account. Cash and partners capital account. Are you able to understand this new concept which is not there in your study mat? New method, not a new method. It is an extension of that maximum possible loss method. Are you able to understand?
Yes, sir.
Yes. That's it. We came to a conclusion to a MTP discussion. This for some 5A, if you want to do, we will quickly do it. You can do it from what is a capital account shows on a credit balance. Which account will show? You will show whether show it will debit or credit balance, and then we will happily conclude this. Okay, because 5B you can easily refer. 5B part 2 also you will refer. 5C also you will refer. I have already discussed everything in a previous discussion. You can easily discuss with that part. Okay, so can we just go for a quick basic thing? Trial balance. Everybody ready?
Yes, sir.
Yes. The next question is on the following information. Drawn up the trial balance in the books of Sri Hari Home for the manufacturing is a basic problem. A capital is given, all the values are given. Here, the one important point which you need to discuss is the stock on 31st March 2024. That is your closing stock. Closing stock, you cannot put it in your trial balance. Okay. So what it will become? Capital will have a credit balance. Then we'll first mark whatever there is a credit balance. Capital. Then we'll go for written inward. Written outward is your credit value. Then sundry creditor, commission received. Okay. This four things will be on sales. Will be your credit values, and your debit values are discount allowed, carriage outward, return inward. Return inward is nothing but your sales return, and stock, opening stock, purchases, carriage inward, sundry debtors, plant and machinery, cash at bank, investments, cash in and motorcycle. We'll just quickly calculate the debit values, and we will find out the credit values as well. If I add the credit values for 4,20,000 plus 1,80,000 plus 2,100 plus 36,000 plus 5,400, it will become 6,43,500. In credit debit side, 3,600 plus 6,900 plus 900 plus 3,600 plus 46,500 plus 1,08,000 plus 26,100 plus 2,42,100 plus 60,600 plus 30,300 plus 10,800 plus 300 plus 1,03,800. It will become same 6,43,500. Both is getting tallied. So with this, we came to a conclusion to our MTP series and MTP discussion. Those who want to get this PDF, in the description below, I have given my number. Go and WhatsApp me with your name and place, and you will get this PDF as well with our entire full copy. We will share you. Thank you. Have a nice day.